All right. So as I mentioned, the title is some small businesses tax saving tips that we're going to talk about today. So that's myself. Yeah, I'm a PhD professor, and now I'm working at Community CPA. So our the company phone number here is 515-288-3188. Okay, a quick disclaimer. So basically, so if you're just listening to this webinar, there's no client that by itself does not form a client relationship with us. So we're not responsible if you just do things solely rely on this and do things on your own. So if you're uncertain about something, you're welcome to become our clients or seek professional help and professional advice at your local place. All right, and so a few words about our company. So our website, thecommunitycpa.com. So that's where you can find not only information about our firm, but also information about the webinars that we're offering right now, as well as the past webinars and future webinars. And also you can go to our YouTube channel, Community CPA, to find all of our past webinar YouTube. All right, so we are a regional CPA firm with the 3 offices right now in Des Moines, Coralville, Iowa, and also in Minneapolis. So we offer accounting, tax, payroll, and audit, as well as business and legal advisory services. Right, and so for year-end tax saving or tax planning, I should say. So in general, so we have been talking about the so-called 3-dimensional tax planning strategies. So for those of you who are regular attending our webinars, you have seen those concepts in the past already. So the so-called 3D tax planning strategies. So the 3 dimensions or 3 aspects in tax planning. These are the fiscal years, accounting method, and the choices of tax structures. All right, just quickly, so choice of tax structures. So for instance, that can be a C Corp, S Corp, or partnership, or even a single, the sole proprietorship or single member LLC. And then in terms of accounting method, so the 2 main accounting methods is the cash method and the accrual method. And also the fiscal year, you can choose the non-calendar year. I mean, ordinarily, the calendar year is the fiscal year, but you can choose a different 12-month cycle as your fiscal year, at least in some cases. Right. So all of these can help you in your tax, overall tax planning, and also they can be used as useful tools as useful tax saving tools. All right. So So the first thing I want to talk about today is related to formation of entities as well as choices of fiscal years. And it's almost end of November, so there's still about a month or so for you to form a company for 2023. So remember, so the when it comes to tax filings, at least for income tax filings, it's an annual tax filing, not a monthly or daily tax filing. Okay, so even if you form your company on December 31st and operate it for just that one day, so that's going to be for 1 year when you go to tax filing for 2023. Okay, so and you still have a month right now, a little over a month, to form a new company in 2023. So if there's any needs for a new company, and also if that company may help you somehow, you still have time to do that for the tax year. For the calendar year 2023, of course, I should say, or for tax year 2023, because even when you do the fiscal year, let's see, fiscal year 2023 can be any month that started in 2023. So, for example, if you do the December 1st through November 31st of the following year, so that is a fiscal year, of course, because not just a standard calendar year. And but because December, if it starts in December 2023, so that's actually considered a 2023 tax year. So even though there are more months in 2024 for your fiscal year, okay, it's just a concept. The by IRS definition, a tax year means a year that started in that year. Okay, so in 2023. So if you look at your tax return form, that definition is quite clear. All right, and also if you when you form a new company, and if you don't want to just file your tax return for that 1 month or even 1 day, so then you can make an election for a fiscal year. But typically, of course, this can only be done for C corporation. So you can form a new C corporation, and so that, let's say, it's formed on December 31st, December 1st. So then you can elect your fiscal year to be December 1st through November 30th. So then your fiscal year won't end until almost a year from now. So you don't have to worry about any of the tax consequences yet. You can just open a company, start to operating your business, and then when the fiscal year closes, which means after November 30th of next year, so then you worry about do the summary and worry about how you file your income tax return for that 2023 tax year. Okay, so again, that's a fiscal year in that example. So that's a 2023 tax year. And all right, so that's one aspect. So we look at the formation of entity and the choice of fiscal year, and that's actually really two aspects that's covered already. So the accounting method, that's the third dimension. Okay, so maybe I'll scroll back and look at the three dimensions already. Okay, and three-dimension tax planning. So remember, the tax structure is one thing. So when you still have time to form a tax structure for 2023, and then you can choose your fiscal year. If you don't choose a fiscal year, a non-calendar year fiscal year, so then of course you only have about a month for the calendar year. But if you choose a fiscal year, for example, from December 1st through November 30th next year, then you have a whole 12-month cycle to worry about. Okay, so the accounting method, I just started to talk about that. Okay, so the accounting method, the two basic accounting methods, one is a cash method, and in the cash method, the only the money deposited into the bank is counted as income. Okay, so if somebody give you a check on December 31st of 2023, and if that's a weekend, well, by the way, I didn't check my calendar, so I don't know what that day is. But in either case, whether it's a weekend or not, so if you did not deposit that check, by the way, December 31st, 2020 is a Sunday, okay? So if somebody gives you a check on December 31st, and so then obviously you cannot even deposit check. Let's say even if the client give you the check on December 20th or 29th, and you just didn't have the time to deposit it, so then that check will not be counted as income for 2023, because that in the cash method, only the money deposited into your bank is counted as income, and likewise, only the money that's withdrawn from your bank is counted as expense. Okay, so if you wrote a check out to either someone providing service to you or selling you the product, but if they did not cash the check in 2023, so then you cannot count that as an expense for 2023. So if you have major purchase that need to be completed, you make sure the money is actually going to go out of your bank by December 31st in order for that the purchase to be counted as a 2023 expense. Okay, so in most small business situations, the cash method is the standard accounting method. So then make sure and that's how the expense would be only those withdrawals from your bank. Okay, I mean unless you were using hard cash to make a purchase. Okay, the hard cash make a purchase, that of course in a cash method that will also be counted as expense, but then of course you make sure you get a cash receipt. So if you're spending money that way, okay. So that's a drawback of the cash method. If it's more on the expense side, okay. So if a income, let's say someone else paid your check, you get that delayed, so then that may help you, okay? So because you have less income to count, but if you have a major expense, then you want to make sure that money goes out of your bank account, okay? And then the other method, typical accounting method, is accrual method. In accrual method, if you assign a contract for whether service or for selling your product, so even though you have not received the money, okay, so but you know that money is coming, so that committed revenue need to be counted as an income. And likewise, if you committed a purchase, whether it's a service or product, but you're paying by installments, or even just paying by 3 payments, or even 1 payment, but paying at the end, so you can defer, but so you defer your payment, but on your book you need to recognize such revenue or expense when that not when a payment or revenue incurred, but actually when a contract or the commitment incurred. Okay, so which means that let's see, if you sign a contract in December, so then that depending on which way the contract is, so then that can be a revenue or a expense on your 2023 book, even though the actual payment for that related to that contract is going to be in 2024. Okay, so that's the accrual method. You can also, just like the cash method, there are some situations that may work in your favor, and in the accrual method is like the same way. Okay, so just recall in the cash method, you want to make sure the expense goes out, and so then that can be counted as an expense for you in 2023. But if someone gave you a check, you didn't deposit timely, so you only deposit in 2024, that will be counted as 2024 income. Okay, but in the accrual method, so if you know you have an expense, you have a major purchase, you want to make sure that you commit that purchase in 2023, so then that can be counted as a 2023 an expense under the accrual method. Okay, so I should also mention that the accrual accounting method is not something you just change arbitrarily from year to year. You actually have to have a reason. So once you start with cash method, for example, and then you need to stay in cash method. So unless you make a request to IRS to change your accounting method, okay? So that is not something that will be approved automatically. So you have to do it timely and according to the rules, or else you will still be diverted back to the original method that you were on. Okay, so the accrual method is the same way. So unless, of course, you fall under, let's say in 2023, you had so much income, so big in revenue, and you cross the threshold. So if your annual sales in the past 3 years crosses $25 million, so then you're required to use accrual method. Okay, so there are some situations you'll be required to use the accrual method. So the threshold is $25 million. Okay, and so previously, we just talked about how to use the 3-dimension tax planning to help you to do some tax saving or tax planning at the year end. So there are a few other tax tips I want to mention. So one of them, of course, is the 401k cash balance plan, and you still have time, but those do take some time to get them set up. So you want to act on those right away. So these are not something that you can set up on the last day of the year. Okay, so if that's something you want to consider, you want to act on it right now, right away. And also, you want to look at your contract and to see how the things can be partially recognized, whether it's revenue or expense, whichever way that's going to be helpful to you. And then you want to structure things in a way that's going to be helpful to you. But of course, you want to make sure they all comply with the rules. So that's why you want to review those contracts, right? And of course, you could also make a purchase of depreciable assets, so that, and then especially those that still are eligible for bonus depreciation. So recall that in 2021, 2022, so there are a lot of things that you purchase can be 100% depreciated, meaning that the entire expense can be deducted as an regular expense, and so that depreciation rule or bonus depreciation is phased out. But 2023 not too bad; it's still at 80%. So most of the things that you purchase probably would qualify for the 80% depreciation in 2023. So you can still take advantage of that. And then if you have you plan to buy a heavy vehicle, these are the vehicles that's over 6,000 pounds, those will be considered transportation equipment, so then they actually are still at 100% depreciation. So these are some of the tips. And there are many more, so we won't go into all of them. So so that will be a quick webinar on tax saving tips today. And so that concludes our webinar today. So finally, to just remind everyone, if you have other questions, you can contact us at Catherine@communitycpa.com. That's our general email box. Or call us at 515-288-3188. We are open 6 days a week, Monday through Saturday, and 8:30 a.m. to 5:30 p.m. Central Time. And if you want to subscribe to our YouTube channel, so that our YouTube channel is Community CPA. And if you like any of our webinars, so please give us a thumb up. Thank you for listening and watching, and see you next time.